China's collapse is much worse than you think. Although many of the short-term impacts of the zero-COVID policy and widespread protests are clear to see, not many people are aware of just how severe of a crisis the Chinese economy is facing in the long run. Today I'll be taking a deeper dive into the catastrophic long-term negative consequences facing the Chinese economy, as well as touching on some of the short-term ones too. China's zero-COVID policy is still in full force, with widespread lockdowns taking place still in many cities in China. The city of Xinjiang has now been in lockdown for around 3 months, and recently there was unfortunately an apartment fire which killed 10 people. Now, part of the reason why there was this many casualties was because there was delays to the fire rescue team in getting to the scene and getting into the building, mainly to do with excessive COVID restrictions because of the area being in lockdown. This included makeshift barricades and blockaded emergency exits to make sure people stayed indoors, which hampered the rescue service ability to rescue residents in the building which was on fire. Now, many Chinese residents are totally fed up with the excessive government policies that are continuing to be enforced in an attempt to reduce the number of COVID cases at all costs, and it seems like this apartment fire incident was the final straw for many people. Now, this incident led to the beginning of a protest in which the people who saw the disaster unfold took part in it, and since then many other people have joined in, and the situation has transitioned into widespread chaos across China, with protests against the zero-COVID policy now taking place in many of China's largest cities. Now, the internet is extremely censored in China, and the CCP essentially has a massive nationwide firewall set up to make sure that nothing is circulated on the Chinese internet without approval from the CCP. For this reason, large-scale protests are very rare in China, as it's very hard to organise one. However, it looks like a significant percentage of the Chinese population is on the same page with this one, and word seems to be spreading through social media and messaging apps. Now, protesters are having run-ins with police and security guards, destroying cars, bus shelters and many other things in the city, and in general are wreaking havoc and causing a lot of destruction across China. The protests are increasingly starting to impact business operations in China, and there is now major disruption to a large Foxconn iPhone factory in Zhengzhou that employs about 200,000 people. Now, workers have abandoned their work to join in with the protests in a violent and destructive fashion outside the factory, which includes clashing with riot police and tearing down barricades. Now, even before the protests broke out, Apple had warned that poorly organised lockdowns in China would impact their production capabilities and sales, with longer waiting times for holiday purchases like the iPhone 14. If the CCP continues with their hardcore zero-COVID policy, then disruption to manufacturing capabilities across Chinese factories is only going to get worse and continue to hurt China's overall economy. China accounts for 156 of the total 615 Apple production facilities, meaning that China is the number one country that Apple conducts their product manufacturing. Now, this makes Apple quite dependent on China. However, Apple also brings a lot of benefits to the Chinese economy in the form of millions of jobs and business activity. Now, Apple has invested over $275 billion in China since 2016 in a deal that Tim Cook made with the CCP, allowing Apple to grow most of its operations in the country. Now, a significant portion of this money goes towards paying Chinese factory workers, which ultimately gets recirculated around the Chinese economy and is overall very beneficial to China. However, since 2020, Apple has shared some concern over its dependence on China, especially seeing the way that they have dealt with COVID, which seems to increasingly be getting worse over time. Analysts do believe that the woes facing Apple in regards to factory and manufacturing disruption will speed up the pace of their diversification away from China and into other countries like India. Now, according to Daniel Ives, who is a managing director of equity research firm Wedbush Securities, every week of the shutdown and unrest in China is costing Apple around $1 billion a week in lost iPhone sales, and it is now believed that roughly 5% of iPhone 14 sales are likely to be off the table due to the brutal shutdowns in China. So Apple's transition away from China is not going to happen overnight, and it's going to take a lot of time to build out new factories and manufacturing facilities in other countries, while simultaneously shutting down their Chinese operations gradually. But I do think that the writing is on the wall, and Apple is most likely going to make this move in the coming years, not only to diversify their manufacturing locations, but also because of the way that the CCP has conducted themselves since 2020 that has ultimately led to this civil unrest that is breaking out right now. This is going to be catastrophic for China's economy, particularly in the areas of the country where these large manufacturing facilities are located, and many people would be put out of work, and this could cause some real economic damage in these areas. More than 20% of China's total gross domestic product is now under lockdown, up from 9.5% about a month ago. Now this is a staggering rise in disruption and damage to China's economy and reflects the increase in lockdowns recently across the country. Although the recent protests we have seen over the last few days may hopefully lead to a shift in CCP policy away from hardcore zero COVID enforcement, lockdowns in China are likely to continue at least into the near future, which will continue to harm China's economic output. In fact, with COVID cases in China on the rise and now being above 40,000 daily, analysts do predict that the percentage of China's GDP under lockdown will rise even higher to 30% over the next few weeks, crippling the economy even more. Now this of course not only affects Chinese companies that are operating within China, as well as exporting out of China, but it does also affect various multinational companies in the West that have moved their operations, particularly in manufacturing, over to China in the past, just like Apple, which was mentioned earlier. Now, when multinational companies set up operations in China, they were doing so because of the relatively cheap labour available in China, combined with the efficiency of this labour force. Now, ultimately, this makes China the perfect location to maximise efficiency of the output relative to cost. However, due to the way that things have panned out since 2020, this is simply not the case anymore, and these Western companies are being severely hampered by the current state of affairs in China, making operations far less efficient than many other countries that they could relocate to. So China's economy has already been struggling before the civil unrest began, and according to the latest data, the Chinese economy grew by 3.9% in Q3 of 2022, much slower than the government target of 5.5%. Now, economists are now predicting that China's economy will fall further in Q4, especially with there being no clear sign that restrictions will be scaled back. Now, Chinese companies across the board are performing worse than expected, and in many cases worse than in previous years. So this has led to the Chinese stock market getting battered over the last couple of years, with the Hang Seng Index being down 45% since the highs seen in 2018, and the Chinese Golden Dragon Index being down a whopping 70% from the highs that we saw in February of 2021. Now this has also led to a number of layoffs taking place in China, most notably with one of the largest Chinese companies, Tencent. Now earlier in the year, close to 5,500 employees were laid off, and it has recently been announced that yet another round of layoffs will be coming in Tencent. Now, with unemployment continuing to rise, this is yet another challenge that China will be facing over the next few years. Which companies are going to be moving into China to create jobs? Because right now, China is not looking like a very attractive place to set up business operations whatsoever. And China has many other fires to put out across their economy, starting with the mayhem that has become of the housing market. Now, it has been over a year since Evergrande, one of China's biggest real estate developers, began to collapse, which began a domino effect across many other property developers across the country. There have since been dozens of these developers getting into trouble, missing debt payments, and even going bankrupt completely. Now, the trouble hitting the Chinese real estate market has led to the sale of new homes to plummet and construction to come to a standstill on many sites. The Chinese government has stayed quiet for the most part. However, the situation has become so bad that last week they came out with new steps in an attempt to minimise any more damage in the future. So one of these steps will be to force banks, many of which are state-owned anyway, to lend more money to developers for the completion of unfinished apartments, including giving the developers the option to defer repayment when necessary. Now, measures to encourage consumer buying are also being put in place, which includes vastly reducing the extensive limits on who can buy apartments and giving tax breaks for people who buy a new home within a year of selling the previous one. So ultimately, the situation has got so bad that the Chinese government is now making desperate attempts to try and avoid the complete collapse of the real estate sector with policies that don't sound very sustainable in the long term. They're essentially giving developers as much money as they want and need in the form of bank loans without really pressuring them to pay back this money in any reasonable amount of time. And because many of these large banks are state-owned, this money is going to be coming straight from the government. So that means that this money is going to be most likely printed out of thin air, which is going to increase government debt or drive up inflation with a vast amount of new money entering circulation. And to make matters even worse, because there will be few restrictions on who is allowed to actually buy an apartment in China, it's likely that there is going to be a lot of unsuitable buyers who don't necessarily have a strong and stable enough income to support the mortgage payments in the future. So this is therefore likely to increase the number of mortgage defaults in the future and contribute to the debt problem and the collapse of the real estate market in China. China is now also facing a number of economic sanctions from the West, hitting the Chinese semiconductor industry particularly hard. If you want to learn more about this, as well as find out more about the dangerous political situation in China, then check out my video on the screen right now, which goes into full detail. I think you'll certainly enjoy it. Apart from that, if you enjoyed the video, please be sure to leave a like, and also subscribe if you want to see more videos similar to this in the future, and thanks a lot for watching.